Today, we will talk about what is Blue Chip Stocks Complete Guide. So before we get started, make sure to hit that like button. Also subscribe to my channel. What are blue chip stocks? While there's no strict definition of what makes a company a blue chip stock, they're generally large, well-known, high-quality, time-tested, industry leaders with reliable financial performance and growth. When investors discuss blue chip stocks, they're usually referring to household brand names with a long history of steady performance and a dominant market share in their industry. I like Investopedia's dead simple definition. A blue chip stock is a huge company with an excellent reputation. Blue chip stocks get their name from the blue poker chip, which holds the highest value. To be clear, that doesn't mean blue chip stocks are the highest priced stocks. Instead, it means investors consider them to be the most valuable or highest quality. But just because a company is large, that doesn't automatically make it a blue chip stock. Take Tesla, TSLA, for example, which currently has a $670 billion market cap, making it the seventh largest stock on the US market. Even though Tesla is a huge company by market cap and has a promising future, it lacks the proven history and stability required to be considered a blue chip stock. Many investors prefer blue chip stocks that offer healthy, stable dividends, but there's no rule that says a company has to offer a dividend to be considered a blue chip stock. For example, you could argue Google, GOG, Amazon, AMZN, and Berkshire Hathaway, BRKB, are all solid blue chip stocks, and none of them offer a dividend. As I'll explain below, dividends are one of several blue chip criteria that are really up to you, the individual investor. What makes blue chip stocks a worthwhile investment? There is a broadly held belief among risk-averse investors that blue chips can cope with severe market challenges of any kind. That's partly true, but stock market fluctuations deprive you of a 100% guarantee. The feature of this large market is its volatility. Such infamous stock sell-offs as Black Mondays and Black Thursdays speak for themselves. Blue chip stocks are the least affected equities in times of such events. Although blue chip stocks have been proving their relative stability over decades, it's crucial to have a diversified portfolio with more than one type of stock. Even with a list of the largest companies you consider rock solid, you shouldn't invest exclusively in their individual stocks to make up the bulk of your portfolio. Diversification is an essential investing technique that is applied to spread your money among various classes of stocks. Choose companies from contrasting industries and different geographical locations, and make sure your portfolio includes stocks with all types of market capitalization, small, mid-cap companies, and large ones. Needless to say, investing in a few blue chip stocks is still a wise choice, as their reliability makes them nearly immune to market downturns. Why invest in blue chip stocks? Out of nearly 8,000 stocks traded in the US, there are probably less than 100 blue chip stocks. So by focusing on blue chips, you're instantly reducing the stocks you're considering by nearly 99%. But others would argue that not only are you ignoring thousands of faster-growing stocks, but you can find the same things you like about blue chip stocks: steady performance, healthy dividends, low volatility, economically defensive, in many other companies that aren't considered blue chip stocks. Why blue chip stocks can be a good investment? Blue chip stocks attract investors who want modest, steady, consistent returns in the stock market without too much work or stress. In general, blue chips are considered a safe long-term investment with less volatility and less vulnerability during a market downturn. Their risk-reward profile often appeals to older investors who are closer to retirement, as opposed to younger investors with a long time horizon and greater appetite for risk. In times when stock prices struggled to gain, dividends contributed more of the total return. For example, look at the 1970s when dividends contributed 73% of the total gain. On the other hand, in years when stock prices were performing well, dividends were responsible for less of the total return. Look at the 2010s, where dividends have contributed only 17% of the total return. World's most wanted blue chip stocks. Amazon. Founded in 1994 as an online bookshop, Amazon has transformed into a multinational tech company that is now a member of the Big Five, along with such industry giants as Google, Apple, Microsoft, and Facebook. Today, Amazon focuses not only on e-commerce, but also on cloud computing and AI technologies. The versatile online store offers literally everything, from foodstuffs to various subscriptions. Apple. As of 2021, Apple can boast the title of the world's most valuable company. The company was founded in 1976, and the first product manufactured by it was an Apple I personal computer. From that moment on, Apple has been developing a wide range of top-notch devices, software, and cloud services. The most popular Apple product used by consumers from all around the world is the iPhone. Facebook. Facebook was founded in 2004 and acquired its blue-chip status only recently. This social media giant was first intended to be an online messaging platform used exclusively by Harvard students. 17 years later, it has transformed into a huge social network that serves as the main method of communication for more than 2.5 billion users. Microsoft. Microsoft Corporation was born in 1975 when two childhood friends decided to make use of their programming skills to earn some money. A garage project has turned into a powerful company that is best known for inventing one of the most popular operating systems in the world. Other Microsoft products include MS Office and the well-known Internet Explorer browser. Despite the abundance of strong competitors, Microsoft still holds the title of the world's biggest software producer. Coca-Cola. Founded in 1892, Coca-Cola has quickly become a beverage leader, and it's all thanks to its namesake sugary soft drink. Marketed initially as a temperance drink used for medical purposes, Coca-Cola is now one of the most recognizable sodas globally. Are blue chip stocks really that safe? Summing up everything mentioned above, blue chip stocks can be fairly considered safe and good investment instruments for your retail investor accounts, even on the choppy stock market. They have to be well capitalized in order to join the elite blue chip group, and that's worth something. However, even a blue chip stock might have a BBB credit rating, and if it does, its safety and stability are called into question. A company that was once the bluest of all blue chips, this industrial giant is not bankrupt yet, but its financial struggles have already turned it into a shadow of the former glorious entity. Trying to pay down debt, the company had to sell several businesses, which has significantly impaired the total value of GE. Investing is always about high risks, and even blue chip stocks are not completely safe. However, they are indeed the safest investment tools presented on the stock market today. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.